What are Perkins loans and how do they work? Imagine needing help to pay for college and finding a loan that's designed just for students with the greatest financial need. That's what Perkins loans were all about. These loans were a type of federal student loan aimed at helping undergraduate and graduate students who faced the most difficulty paying for school. They offered low interest rates and were subsidized, meaning the government paid the interest while students were in school or during their grace period after leaving. The interest rate on Perkins loans was fixed at 5%, making repayment predictable and manageable. Unlike most federal student loans, Perkins loans were issued and managed directly by the college or university you attended. This meant your school handled the paperwork and repayment process, often through their financial aid office or a contracted company. The loan limits were set based on your level of study. Undergraduates could borrow up to $5,500 per year, with a total limit of $27,500 over your entire undergraduate career. Graduate students could borrow up to $8,000 per year, with a maximum of $60,000 including undergraduate loans. Repayment on Perkins loans started 9 months after you graduated, withdrew, or dropped below half-time enrollment. The repayment period could last up to 10 years, with monthly payments usually around $40, depending on how much you borrowed. During the grace period and while you were in school, no interest accumulated. But once repayment began, interest at 5% started to accrue on the loan balance. One of the benefits of Perkins loans was the possibility of loan forgiveness for those working in certain public service jobs. If you became a teacher in a low-income school, a nurse, law enforcement officer, firefighter, librarian, or served in the military, you could qualify for partial or full cancellation of your loan. Typically, a percentage of the loan was forgiven each year you worked in these fields, and after 5 years, you could see the entire loan forgiven. The Perkins Loan program was discontinued in 2017, with the last loans dispersed in 2018. If you already had a Perkins loan, you are still responsible for repayment and can benefit from forgiveness options if you qualify. Since the program ended, students now look to other federal loans like direct subsidized and unsubsidized loans, which have different rules and benefits. In short, Perkins loans were a helpful, low-interest, need-based federal loan that was managed by your school, offering favorable repayment terms and forgiveness options for public service workers. Although no longer available to new students, they played an important role in helping many students afford college. If you have an existing Perkins loan, it's important to stay on top of your repayment schedule and explore forgiveness options if you work in qualifying fields.